Liberia is one of the poorest countries in the world. It's just emerged from a civil war and the average life expectancy is only 45 years. And yet this country may soon have to pay $20 million to two investment funds, Hamsa Investments and Wall Capital, for a loan taken out by the government back in the 70s. The funds bought the debt years ago and now want the money back plus interest. $20 million amounts to 5% of Liberia's total yearly budget. So-called vulture funds have been condemned by several governments for preying on the world's poorest states. They buy up the debt of near-bankrupt nations at a cheap price from financial institutions. They then sue those nations in international courts for the full value of the debt, plus steep levels of interest and penalty charges. Every year, developed countries spend billions of dollars to help pay off the debts of poorer nations. But vulture funds siphon off that money for themselves. The two funds are in London to sue Liberia over the $20 million debt. The funds have asked the High Court for what's called a summary judgment, which means Liberia could be liable to repay the debt without even getting a full hearing in court. The court will look at the legality rather than the morality of this case.
Various organizations and members of parliament and in the states, important politicians are seeking to put through legislation to stop this kind of exploitation and undue profiteering.
The $20 million debt amounts to half of Liberia's health and education budget. What the vulture funds try to do is certainly controversial, but it is, for the moment, legal. Barbara Serra, Al Jazeera, London.